For this video, I want to cover the IRS Form 8962, which is the premium tax credit, and this is going to be for the 2024 tax year. So we've got a sample 8962 here, and it is part of the full Form 1040 for this taxpayer. So we'll cover the 8962 and all the other schedules that you're going to have to complete in the 1040. We've also got the Form 8962 instructions here. This is the updated 2024 version. And then we have a sample 1095A health insurance marketplace statement for this taxpayer. So you're going to need all three pieces in order to complete this form. So before we get into the form, let's just have a quick look at some of the background on the credit, what it is, and then more details on the fact pattern. So this Form 8962 is going to be required with your Form 1040 if you enrolled in a health insurance plan through the federal marketplace and you received a 1095A. So if you get one of these 1095As in the mail, or alternatively you can often download them from the provider's website, you're going to have to complete the 8962. Now, the 8962 is required because it is going to reconcile the amount of your advanced premium tax credit that was paid each month to supplement your health insurance costs. So it reconciles the advanced amounts with the amount that you're actually able to claim. And then when you get to the end of the form, you find out whether you had too much advance and you might have to repay some, or maybe you didn't get enough at all, and you need to claim the credit on your return. Now, the IRS is going to get a copy of this 1095A. And so that's important because if you file the 1040 without the 8962, there's a couple things that could happen. One, your return could just flat out be rejected from e-filing. So if they have a 1095A on file and they don't see the 8962 included, they're not going to accept the return until you include that form. Or if you paper filed or was able to go through electronically and it's missing, you might get a notice from them saying, hey, we think you should have included this with your return. Please go ahead and complete it and send us an updated filing. Now, if the taxpayer does have to repay any amounts that were advanced, you might not have to repay the whole amount. There are repayment limits that could apply. So let's look at the fact pattern here, and then we'll get into the 8962. So in our fact pattern, we've got John Doe. He's a resident of Florida. He's a single filing taxpayer, no dependents, and he recently accepted a new job at a startup. Well, the startup is quite small, only, let's say, a handful of employees, and so they don't yet provide health insurance coverage through the employer. So John's aware of this, he's okay with it, so he just enrolls separately in a health insurance plan through the marketplace, and you can find more information on that at healthcare.gov. Now, the plan starts for John February 1, 2024, and his monthly enrollment premium ends up being $369.28, and he's getting an advance of $316.91. So the advance is based on an estimate of what you think your income is going to be during the 2024 year, right? So these numbers are going to vary from person to person, and it's also going to vary based on what kind of plan you have, where you're living. So there's a lot of variables that go into play there, but all that information is reported on the 1095A. So this is completed and provided to you, and it provides all the details down there in Part 3 for the coverage information. All right, so John, at the end of the year, when he's doing his 1040, he gets his 1095A, and he uses those details to complete the 8962. Now, in this fact pattern, we're going to see that John is eligible for the premium tax credit, but his advances exceeded what he, in effect, should have gotten. And so he's going to have to repay some of the amount, but there are going to be repayment limitations in place, so he's not going to have to repay the whole thing. So let's have a look at the 1095A and just cover what information is provided here. So Part 1, we have information on the recipient here, so John Doe, and information on the insurance company and the policy. Part 2, the covered individuals under the plan. So in this case, because John, he's a single filing taxpayer, he doesn't have a spouse, he doesn't have dependents, so he's the only person listed here in Part 2. Now, the coverage information lists the monthly enrollment premium, the second lowest cost silver plan premium, and then the amount of the advance. So the advance piece is what needs to be reconciled to figure out whether this advanced amount was too much or too little. That's kind of the best way to think about it. All right, so if we have a look at the 8962, let's first start with page 1 of his 1040 to get a sense of his income and expense information report on the return. So we can see here up on line 1A, his W-2 wages for the year, $42,500, and he has some investment income. He has $15 of taxable interest just from his savings account. He has some capital gains on the sale of stocks, $742, and he also has some tax-exempt interest income of $10. So his total AGI, or adjusted gross income for the year, $43,257, and his taxable income is $28,657. So once you have that information in place and the 1095A in front of you, you can start working on the 8962. So in Part 1, enter information on your AGI. So notice here it's asking for modified AGI. So for most taxpayers, they can simply just use their adjusted gross income report on line 11. However, if you have certain types of income or other adjustments, you have to make changes to get to your modified AGI. And so what is that? Well, in the form instructions, there's a worksheet for this, and we also have one below the form here. Worksheet 1.1, modified AGI for the 8962. We use your adjusted gross income as the starting point, and then we make two adjustments here. Right, so one adjustment is made for any tax-exempt interest, and then we have a second adjustment, if applicable, for Form 2555, which is the foreign earned income exclusion. In John's case here, we have his AGI, and we have an addition for tax-exempt interest reported on his 1040. So this is one adjustment that applies to John. He's not taking the foreign earned income exclusion, so line 3 is blank here. So we have the one change to increase his AGI by $10 up to a modified AGI of $43,267. So $43,267 is his modified AGI report on line 2A. Total dependents, modified AGI left blank because he doesn't have any dependents. So the household income for John, family size of 1, is going to be $43,267. Now in line 4, we have to enter the federal poverty line. Now why is this important? Well, this number, and also depending on what your modified AGI is, kind of drives how much of the premium tax credit you can get. It's also important because if your income is below the federal poverty line when you estimate it, when signing up for the health plan, you don't receive any advanced premium tax credit. You still are generally eligible for the premium tax credit, but you wouldn't get any advanced amounts. All right, so where do we find this figure? Well, you can find that in the form instructions. So if you go to the form instructions, I've already got it bookmarked here, so we'll jump down to the federal poverty lines. So we can see here, family size of 1, I've highlighted 1. And 14,580 is the federal poverty line for John, given that he is living and working in Florida. There are separate tables for Alaska and Hawaii, right? So if you're a resident and working in those states, and that's where you signed up for your plan, then you would use these tables instead. But for the District of Columbia and the other 48 contiguous states, you would use this table 1.1. So we've got the 14,580 entered there, check the other 48 states in DC box, and then calculate the household income as a percentage of the federal poverty line. So we just divide the household income, 43,267 divided by 14,580, and we're left with 296%. Now, this figure is important for a couple of reasons. One, we needed to look up the applicable figure where we calculate the annual contribution amount, And this percentage is also relevant when we talk about repayment limitations. And so we'll get to that at the end of the form. So once you have the 296% figure, you go back to the 8962 instructions, and there is a table within the instructions where we pull the applicable figure. So look up the percentage that you calculated. So we had 296%. So you can see again, I've highlighted it here just to make it easier. So with a 296%, we have a factor of 0.0584. So we go back to the 8962 and we enter on line 7, 0.0584 as the factor. Now moving on to lines 8A and 8B, the annual contribution amount, we multiply the household income on line 3 times the factor on line 7, and we're left with 2527, and then 8B, the monthly contribution amount, divide line 8A by 12. And as it notes here on this form, and like a lot of other forms, when you file your taxes, you're not entering dollars and cents. You're just rounding to the nearest whole dollar. So we have $25.27, and 8B is $211. Now moving on to part 2. For questions 9 and 10, these are both no, they don't apply to us. So question 9, we're not allocating policy amounts between the taxpayer and another party. So we continue on to line 10. And the annual amounts is basically a summary of all the monthly amounts. You can use the line 11 annual amounts if you were covered by the plan the entire year and none of the monthly amounts change, so they didn't fluctuate from year to year. In other words, if you're looking at your 1095A and you see that you're covered the whole year, so you have amounts filled in for January all the way through December, and all of the dollar amounts remain the same month to month, then you can use the annual totals. If that's not the case, then you're not going to be able to use the annual totals amount on line 11. You're going to have to enter the values for each and every month, and that's what we're going to have to do here. All right, so now when we look at lines 12 through 23, the 1095A pulls information for 3 columns. So column A, B, and F derive the information from the 1095A. Columns C, D, and E are calculations that are done on this form after you've entered the amounts for A, B, and F. So if we look at the 1095A here, column A, monthly enrollment premiums, the second lowest cost silver plan, and then the amount of the advance. So we would enter the monthly enrollment premiums here, the second low cost silver plan premium here in column B, and then the advanced amount, column F, is the third column from the 1095A. So if we look at February, for example, we have February 369.28, 399.91, and then 316.91. So we go back to the form and enter those values for February. There's the $369, $400 because we're rounding up to the nearest whole dollar, and then $317 is the advance. So you would do that for every single month. Just enter the information that corresponds with your 1095A. Now, once all that's entered, then we can look at columns C, D, and E. So column C, the monthly contribution amount, this is the amount from line 8B above. So we have our 8B figure, $211. That's entered for each line item. So 211 all the way down. That's pretty straightforward. And then the monthly maximum premium assistance, we're subtracting column C from B and entering the difference there. Now, if it's 0 or less, enter 0. But if it's a positive figure, enter that positive figure there. So we take 400 minus 211, and we're left with $189, and that applies for all of these rows. The monthly PTC allowed, so the amount of the premium tax credit that is allowed based on these income numbers, is going to be the smaller of the amount in column A or D. So we have the monthly enrollment premium of $369, the monthly maximum of $189. So we enter the smaller amount, which is the $189. All right, so that's the table completed in part 2. Now we start to look at the totals and calculate whether we're due more of a credit or we might have to repay some of the credit. So the total premium tax credit, enter the amounts from line 11E, so if you're using the totals up here, or you add up the amounts from lines 12E all the way through 23E. So if we take the 189 times 11, so we add up all these, we're left with $2,079. The advance payment of the PTC is column F, so enter the amounts from line 11F if you're using the totals, or 12F through 23F. So we take the $317, we have 11 entries, and so the total advance payment that was paid to you is $34.87. All right. Now, once those figures are entered, we can complete line 26 if applicable. So this is the net premium tax credit. If line 24 is greater than 25, subtract the difference and enter it here. Okay. Now, if line 24 is equal to line 25, just enter a 0, stop, and stop here. You're done. What that would mean is that the amount of advance premium tax credit paid to you exactly equals the amount of premium tax credit that you are eligible for. All right. Now, if line 25 is greater than 24, leave this blank and move on to 27. And that's what's applicable here. The amount of our advance payment exceeds the amount of premium tax credit that we're eligible for, which indicates that we've got to repay some. All right. So we've left 26 blank and we're moving on to part 3, line 27. So the excess advance payment of the PTC, if line 25 is greater than 24, subtract 24 from 25 and enter the difference here. So the difference for us is $1,408. The best way to think about this is that we basically received an advance payment each month that was in effect too much. So based on our income, our household size, our filing status, we received too much of advanced premium tax credit to cover our health insurance costs, so now we have to repay some, and the amount that we have to repay is $1,408. Now, we don't just use that number because the repayment limitation may apply to you, and that does apply to John under these circumstances. So how do we figure out what the repayment limit is? So if we go back to the form instructions, there is another page within the instructions, the repayment limit. I've also got that bookmarked here to make it easier, and highlighted table 5. So the repayment limitation is going to be based on your household income over the federal poverty line. So we're going back to that federal poverty line percentage. So if we look at the 8962 again, remember line 5, our factor here was 296%. So if we look at the table again, 296% falls within this range here, right? At least 200, but less than 300. And based on our filing status of a single filing taxpayer, the repayment limit is going to be $950. All right, so if we go back to John's form here, $950 is the repayment limitation, meaning that even though he has to repay $1,408, that was the excess advance payment of the PTC, it's capped at $950 of repayment. So the excess advance repayment here, enter the smaller of what's reported on line 27 or 28, the smaller number being the $950. So once we have that calculated, we can enter that total on Schedule 2, line 1A. So if we jump up to Schedule 2 on the 1040, very top of the form in Part 1, additions to tax, we have the excess advance premium tax credit repayment, and that's being pulled from the Form 8962. So there's our $950 figure, okay? Now, if we go back to the 1040, pages 1 and 2, scroll down here, we can see that the total income, taxable income that is, $28,657, and based on his filing status, he owes $3,119 in taxes on that taxable income. So that's his tax liability. The tax liability is increased for the repayment of the premium tax credit. So we have a $950 increase to taxes. So his taxes have increased to $4,069 because he has a repayment obligation for that advance PTC. So $4,069 is the total amount of tax that John owes with his return, and it comprises those two pieces. And so he reports his withholding, right? Whatever's reported to you on your W-2, and then that's his net refund. So notice here, had he not had to include that repayment limit, his refund would have been bigger, right? It would have been greater by $950, but because he has to repay some of that PTC, his refund amount has dropped a bit. But these are the rules. This is the way the system is set up. And again, that's why it's really important to include the 8962 if you've got your 1095A, because the IRS needs to see whether or not you do you have to repay some of that PTC, or again, it might work in your favor if you were underpaid advanced amount. So going back to the form here, if you have an amount on line 26, it means that you didn't receive enough of an advance payment, and that would increase your refund and not decrease it. All right. Okay, so that covers it for this tutorial. Hopefully that was helpful. Appreciate you watching and sticking with me to the end here. And as always, I look forward to seeing you on the next video. Thank you.